Are you afraid to miss out on the next big tech boom? AI stocks are crashing, the headlines say it's over, that the bubble popped, that AI was just hype. But the smartest investors, they know something most people don't. This isn't the end of AI. It's the beginning of the biggest wealth transfer in tech history. Because under the surface, behind the panic and pullbacks, the AI economy is quietly building momentum. And the next 90 days could determine who makes life-changing money in 2025, and who watches from the sidelines. Stick around, we're breaking it all down. The stocks falling, the institutions buying, and the overlooked opportunities that could make millionaires before the market even catches on. If you want to stay ahead of Wall Street, hit like, tap subscribe, and let's talk strategy. Let's start with what's really happening. AI stocks are pulling back across the board. C3.ai is down, Palantir off its highs. Even NVIDIA had a recent dip after the GTC hype. Retail investors are panicking. News outlets are calling it the end of the AI rally, but here's the truth. This isn't a crash, it's a recalibration. Markets always correct after major runs. It happened with internet stocks in the 90s, with EVs, with crypto, and now it's happening with AI. But when you zoom out, you realize something critical. The companies leading the AI revolution haven't stopped building. Their earnings are growing, their infrastructure is expanding, and institutional money is quietly pouring in. Wall Street doesn't chase headlines, it chases value, and that value, it's being created right now, in the dip. So, who's buying while everyone else is scared? Big money, hedge funds, pension funds, endowments, they're not pulling out, they're positioning. BlackRock, Vanguard, State Street, they've increased their holdings in major AI infrastructure plays. Why? Because they understand where this is headed. AI isn't a trend, it's a foundational shift, just like the internet was. And those who invested early in Amazon, Google, and Apple didn't care about short-term dips. They saw the bigger picture. And right now, that picture is becoming clearer. AI is going to power every major sector: finance, healthcare, energy, logistics, biotech. The demand for compute is skyrocketing, and the infrastructure to support that future? It's being built now at discounted prices. Let's talk about the backbone of AI. While everyone chases flashy consumer apps and overhyped software companies, the smart money is pouring into the real moneymakers: hardware, chips, data centers, and connectivity. Here are 3 areas worth watching. 1. Semiconductors. Companies like NVIDIA, AMD, and TSMC are creating the physical chips that run everything. No AI model can function without them. 2. AI servers and data centers. Supermicro, Broadcom, and Applied Materials are building the systems that house and power those chips. 3. Networking and power. As AI scales, the need for faster networking and more energy becomes critical. Watch names like Arista Networks and Eaton. These aren't speculative bets. These are companies solving real bottlenecks in the AI economy, and their upside is tied to real-world demand, not hype. So, why is now the window? Because we're in a temporary pullback. Not just in AI stocks, but in the broader market. Inflation, rate fears, global uncertainty, they're all creating hesitation. But underneath that, the groundwork is being laid. Earnings calls show it, hiring data shows it, M&A activity shows it. The companies investing now are setting themselves up for dominance. And history tells us, the biggest gains happen after a pullback, when the dust settles, and the smart money is already in. You don't build wealth by waiting for the all clear. You build it by recognizing the signal inside the noise. Here are 3 things to track over the next 90 days. 1. Institutional moves. Keep an eye on 13F filings. See which funds are increasing exposure to AI infrastructure. 2. Guidance versus hype. Ignore headlines. Focus on earnings guidance and CapEx spending from AI leaders. 3. Market rotation. Watch for capital flowing out of defensive sectors and into tech again. That's your signal the rebound is starting. This isn't about timing the bottom, it's about positioning before the next wave hits, because when it does, the people who bought during the fear will be the ones cashing in on the rebound. If you found this breakdown helpful, hit that like button, subscribe, and turn on notifications. I'm tracking these moves in real time, and the next phase of the AI economy is already unfolding. Stay sharp, stay ahead, and I'll see you in the next one.